What's up everyone, it's Leo, welcome to the channel. I'm here with another video, and today we're going to talk about hard assets and what I think are the top 3 different classes of assets that I am investing in and what you should be investing in. Let's get into it. So the first one, I'm going to talk about a hard asset. What's a hard asset? A hard asset is a physical or tangible item that basically you can hold it, right? So like real estate. So the first one is real estate, and you're probably saying, okay, I don't have any money to buy real estate. Well, there's different ways that you can buy real estate. That's in another video that I took into it, but I like real estate because real estate tends to go up and doesn't crash 30-40% at a time. For the exception of 2008, real estate has been a really good hedge and a good way to build wealth over time. The second one that I want to talk about is gold, silver, platinum. These are actual physical hard assets that you can hold. So I could hold a bar of gold, I could hold some platinum, I could hold some silver. These things I can actually hold that it's tangible, right? So I can actually go and buy a brick of gold and it's mine. It's hard to carry with you, but these are things that hold and store value. Typically, they don't go up as much and have these big swings like stocks and bonds do, and a lot of people usually use that as a safe haven and put like 10% or 20% of their money into a hard asset like that. So these are things that, you know, a lot of people, a lot of wealthy people, they put their money in there and they kind of just use it as they diversify is what they do. A lot of their portfolio, they don't go all in on one asset. They put a little bit in gold and silver. They have some real estate. They have some stocks and bonds, a little bit of everything, because if one of them crashes or one of them goes down, then they're kind of like balanced and they're diversified. The other thing that I like to invest in is classic cars, collectibles, things like, you know, Pokemon cards. I don't have Pokemon cards, I have football cards. You know, these are things that people like to invest in, that if you don't have a lot of money, like when I was younger, I didn't have any money. I bought, collector cards, football cards. At the time, I thought they were a lot of money. I paid $100 for Joe Montana rookie card. It's now worth $60,000 on the low end. So I have these collectible cards, right? So if you don't have any money and you can invest in Pokemon cards or trading cards, in 5-10 years, these things could be worth a lot of money for you. Same thing with classic cars. I like classic cars. I've had them over the years. I've made money on them. They've appreciated in value. If you have $100,000 and you buy a car, most likely it might go up. It might go up in value because they're not making a lot of classics anymore. Usually they make them and that's it. Same thing with exotics, some Ferraris, Lamborghinis. These things are good stores of value. Even watches, that's another thing that's fantastic. You can buy Rolexes, a lot of Patek Philippe's. There's a lot of brands out there that are worth money. These are hard assets, things that people put their money into. Another place to put their money, a lot of wealthy people put their money into, is stocks and bonds. Now, stock market is great. You can put money in, but that's very risky. It goes up and down. Some stocks pay you dividends, some don't pay you dividends. At the end of the day, you have to see what your risk tolerance is. I don't like seeing things going up and down. I like having, even though I have stocks and bonds, I don't have all my money socked away in that. I have a little bit of everything. I've got exotics, I've got real estate, I got collectible cards, I have lots of things, watches, things that I like to spread my money all around because I don't like to have everything. My dad used to say, don't put all your eggs in one basket. That's my strategy. So you're probably asking yourself what I should do. Start with what you can afford with. The other things I like about hard assets is you can borrow against them. This is very important because the wealthy likes to borrow against their assets over time. That's why they do not pay taxes. And if you go and see what Elon Musk just did, he took a tremendous loan against his Tesla stocks. He didn't sell it, which means he took a loan against it and he's buying Twitter. And then Twitter's probably going to make money. I can guarantee it's probably going to make money. It's going to become $1 trillion company and it's going to make money. So that's a really awesome trick with the wealthy. I've borrowed my whole life. Remember, my dad used to tell me, always use other people's money. Don't use your money. So on that note, I hope you enjoyed this video. Till next time, give me a like, subscribe, and if you got any suggestions, please leave a comment. Talk to you later.